My name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about OAS, Old Age Security Clawback. So what happens with clawback? When does it happen? How to prevent it? And just some numbers behind it. So stay tuned and we'll go through that. Before we jump into it, I just want to say thanks again for joining our channel, watching our channel. But many of you, most of you have not subscribed to the channel yet. So about 90% of you watching these videos are still not subscribed. So it costs nothing. It takes 1 second. If you look below, there's a subscription or subscribe button. Click the button. If you enjoy these videos, click like. It really does help our videos get out. We appreciate the growth recently. Many of you have subscribed, but many of you have still not committed to our channel. It's not a long-term commitment if you don't want it to be. Just click the subscribe. Hopefully you enjoy the videos. And if you do, hit the notification bell. We're gonna start releasing actually a ton more videos than usual. Right now we're doing Tuesday, Fridays. We'll probably start moving to Monday, Wednesday, Friday here in the next few weeks. So thanks again for joining us. And to John, my kid's principal who randomly found us on YouTube, thanks for tuning in. So what is OAS clawback? So let's first start with what is OAS. So old age security is a government benefit, a government pension payment to you when you turn 65. You can delay it as far as 70. If you delay it past 65, the benefit amount increases by 0.6% per month. So 7.2% every single year. So if you can delay, there's a benefit to delay OAS. But again, you can start taking it as early as 65, as late as 70. So the OAS clawback is really a recovery tax. And what it is once you hit a certain income level, then the government says, once you've hit that certain level, the government will start clawing back or taking back some of the current payment or future payment of your old age security. So let's go into it and look at an example. So as you can see, it's based on a calendar year. So it's based from July to June every single year. So your income year 2020, so looking at last year, the minimum income recovery threshold is $79,054, okay? So if you make over $79,054 in 2020, as of July of this year, 2021, your payment will be reduced accordingly. So it's reduced by 15% for every dollar above that amount. Okay, so if your income is above $79,054 in 2020 and you're collecting old age security, it will be clawed back. Okay, 15% on every dollar. Once you hit the 128,149, your OAS is clawed back 100%, okay? So let's go through a quick example here. So the example I have below here is for 2019, because if you're collecting OAS, currently it's based on 2019 income year. So let's say your income, the threshold in 2019 was $77,580, so a bit lower than it is for 2020. Let's say your income in 2019 was $90,000, okay? Your repayment would be 15% of the difference between your income, $90,000, and the minimum income recovery threshold, which is $77,580. So as you can see on the screen here, okay, if we look at this, $90,000 minus $77,580, you're left with $12,420. So you times that by 0.15, 15%, and your OAS amount would be reduced by $1,863, okay? So that's how it works. So some people get confused on like 15% of every dollar, but what's the calculation? So it's your income minus that threshold will give you a dollar amount. So in this case, it's $12,420. Times that by 15%, and that's the amount your OAS will be clawed back by. So if you divide that by 12, that's how much on a monthly basis your payment will be reduced. So hopefully that kind of gives you a better idea on, where is the threshold? Like how much can I make before OAS gets clawed back, okay? The second part of it is, if I get clawed back, how much do I get clawed back? So here again, scenario, $90,000 of income, a bit of a clawback. Again, they're gonna lose about $1,800, so about $150 a month off payment. So if you're collecting $600 normally, Now you're down to $450. So that's how the recovery tax works. Now let's jump into a bit more detail behind the recovery tax. How is it clawed back? Like, do you have to pay that in a lump sum, or how does that work? We'll go through that here in a second, as well as kind of some tips and tricks on how to avoid OAS clawback. So if you break that OAS clawback threshold and you have to pay back money, so again, in our example, just about $1,800 in a year, what happens is, like when you do your 2020 taxes now, when your payments change in July, because again, remember, it's from July to June, new payment amount will start in July every single year. So coming up this July, if 2020, you went over that threshold, $79,054, your payment will be adjusted accordingly. So just be aware that future payments will be adjusted based on previous income. So that's how it works. So, look at your 2020 income. If you're above that amount, expect an OAS clawback starting in July. So when looking at OAS clawback and total income, so what income will actually claw back your OAS, right? Because we know if you take money out of your tax-free savings account, that's not taxable income. But what does qualify? So salaries, RRSP or RRIF withdrawals will count as income. Taxable investments. So this is a big one. If you have GICs at the banks or investments at the bank in non-registered accounts, any type of investment account that draws dividend, capital gain, or interest income, that is added to your income. So be aware of that. That could bump you up to a point where you have OAS clawback. So make sure your investments are managed properly. Pension payments, if you have a defined benefit or a defined contribution payment, those add in. CPP and OAS, and capital gains. Now this is a really big one. So we have a lot of clients or meet a lot of people that have a cottage or a rental property or whatever it is. Okay, be aware that when you sell that, if there's a capital gain, 50% of that is taxable and added to your income for that year. Okay, so let's say you bought a rental property 10 years ago in Vancouver, and obviously it's probably doubled in value. You go to sell it. Let's say you bought it for $500,000. You sell it for $1 million. So you have a $500,000 gain. Half of that's taxable. That means $250,000 is added to your income that year. Okay, even if you can split it with a spouse or common law partner, $125,000. Now you're up to that threshold with your other income. You're probably going to get all of your OAS clawed back. So be very aware of that. If you own a rental property and you think that, hey, I'm gonna sell it early in retirement, if you can sell it before you start taking your OAS, there may be benefits to it. So make sure you sit down with your financial planner and go through that process. Like, what is the cost of selling it later on? Because again, yes, you've made good money on that rental property, but it could cost you $6,000, $7,000 in OAS payments just because you sold it a year too late. So be aware of that. There's obviously a lot that comes into it, but be aware, capital gains will add to your income, okay, which could reduce or fully eliminate your OAS payment. So be very aware of that. We see that very quite often, and it's detrimental. It will absolutely wipe out your OAS for at least 1 year potentially. So now that we know what kind of income will potentially, add up and create an OAS clawback, we know how the OAS clawback, like how do we avoid it? What are some tips and tricks to try and avoid OAS clawback? So let's jump through a few of them here now. So income splitting with your spouse or common law partner. So once you hit 65, pensionable income, retirement income can be split, okay? So we've gone through videos where, splitting CPP, and we'll put a link to that below. So you can split CPP payments. So that's one option to keep both of you kind of level and lower. You can split pension income. So if you have a defined benefit pension, on your tax return, you can split that income. Same with RRIF payment. So if you have a RRIF payment, you can split that income as well. One other thing that we see people run into is if you have non-registered investment accounts, make sure that it's split equally too. So it's a joint non-registered account. So any income that you derive out of there can be split as well in retirement. Again, that's a big factor as well. Another great way to reduce your income and avoid the OAS clawback is to utilize the tax-free savings. And I've harped this in other videos. Entering into retirement, you want to make sure that you have a TFSA and you have a TFSA that's funded so that when you need extra money or just a way to reduce your ongoing income stream, you can pull a bit of money out of your tax-free savings account every year, which will give you the income that you need, but not the taxable income. So it's not going to drive up your taxable income because anything you take out of a tax-free savings account hopefully, as you know by now. If not, go back and watch our TFSA video. Anything that you take out of a TFSA is tax-free, so huge benefit there. So one other way that we like to use, if there's a big difference in age between you and your spouse or common law partner, you can actually base your RRIF payment off of your spouse's age. So if we look at the chart here, so I just have from 55 to 74. So let's say you wait till 70 to start your RRIF, okay? So your minimum withdrawal is 5%, okay? But let's say your spouse is only 60. Your spouse would require 3.33%. So when you convert to a RRIF, you can base your RRIF payments off of your spouse's age, not your age, okay? The benefit of that is that you only are required to pull out 3.33% of your RRIF that year versus 5%. So it's a way to kind of keep your amount lower. So it doesn't matter what your age, what your spouse's age. If there's a gap, if your spouse is younger than you, consider it basing it off of their age versus your age. Again, if there's only a year or two, there's not a huge benefit. It's usually when you get to 4 or 5 plus years that there could be a bit more benefit. Most of our clients, if they're within a year or two, we don't look at this option. There's just not a big enough benefit. But if there's a gap, look at basing RRIF minimums off of your younger spouse's age. And the last tip to avoid OAS clawback at 65, and we've talked about this in a lot of videos, and a lot of you actually reached out. I've talked to many of you on the phone, booked calls with you, and I'm actually starting to build financial plans for a lot of you that are watching these videos. So thank you. If you're in a position where you're getting close to retirement, or you just need a financial plan, or want to bounce some ideas off, we do offer that. So we offer fee-for-service financial planning in our office. We have investment management firms. If your money's not being managed properly, we can help you connect with proper money management, all that kind of stuff. So reach out to our office, info@parallelwealth.com. Happy to set up a call with you and just see where you need help and see if we can help you out. So, but the last thing, drawing down your RRSP before 65. Okay. The benefit of that when it comes to OAS clawback is when you hit 65, if you start taking your OAS, the minimum amount you're going to have to take out of your RRSP will be lower because you've lowered that amount from 60, let's say, to 65. So when you hit 65, if it's in a RRIF, there's less amount you have to take out, and there's less amount later on if you wait to RRIF it till 70. So again, drawing down your RRSP from 60 to 65, if you're going to potentially run into OAS clawback at 65, might be a good strategy to avoid that OAS clawback. So thanks so much for joining us today. Hopefully this gave you some insight into OAS clawback, how it works, what the thresholds are. I'll put that up on the screen one more time here for you. So you can see the thresholds on the OAS clawback. So tax year 2020, which we just finished off on, $79,054. If you made over that amount in 2020, you will have a clawback to your OAS. If you made over $128,149, you will be fully clawed back on your OAS. So just be aware of that. So hopefully that gives you some insight. And again, our example that we went through, basically take your income minus that $79,054, you'll come up with a dollar number. If it's positive, times that by 15%, and that's how much your OAS clawback will be clawed back starting in July of this year. So that's the process, that's how it works. So hopefully that helps you out, give some clearance or guidance there. So thanks again for joining us today. Again, if you haven't subscribed to the channel, please do so. If you enjoy these videos, hit the like button. It really does help these videos get out. We experienced that a couple of weeks ago with one of our CPP videos. As you guys like these videos and subscribe, they get traction, they get out, and more people need to hear this content. There's just not enough good educational content on the web. People are getting bad information, bad advice, and all we do here is try and give you the data. We're not trying to sell you anything. It's just raw data. Here's how things work in our world in the financial planning industry, and just help you become more financially literate around all things retirement, tax, estate, and financial planning. So thanks again for joining us. Have a great day.